This is the AI News Flash for May 3rd, 10 a.m. UTC. First up, Wall Street re-rates AI names in 5 major analyst moves. JP Morgan downgraded Meta from overweight to neutral, cutting price target from $825 to $725. CapEx projected to climb 42% to $22 billion in 2027. Free cash flow turns negative, minus $4 billion in 2026, minus $24 billion in 2027. JP Morgan flagged a challenging path to returns on heavy AI CapEx beyond advertising. Micron got a fresh street-high price target of $1,000 from D.A. Davidson with a buy initiation. HBM share expected to reach 21% by Q2 2025. Davidson sees AI creating a longer than usual memory cycle in a positive feedback loop. Goldman Sachs reiterated buy on Microsoft, target $610. Azure guidance 39 to 40% growth. CapEx $190 billion, 20 million Copilot seats. Mizuho upgraded CrowdStrike to outperform, target 520 at 14 times CY27 ARR. Adobe was downgraded by Mizuho to neutral, citing margin erosion risk. AI winners and losers diverging sharply. Next, UK Advanced Research and Invention Agency, ARIA, pledged £50 million of British taxpayer money to 14 US tech and venture capital firms. Joint Guardian and Democracy for Sale investigation. ARIA, the brainchild of Dominic Cummings, has committed over one-eighth of its £400 million R&D budget to American firms. £23 million went to 9 US tech firms, $29.4 million to 3 US VC groups. Sam Altman-backed Rain Neuromorphics nearly collapsed last year, shortly after winning ARIA funding, with 2 founders departing. Pillar VC received £10.9 million, having incorporated in the UK just 1 day before the contract. Eric Schmidt-backed Renaissance Philanthropy received £13.3 million. Normal Computing got £6 million, incorporated in UK weeks before the grant. ARIA claims 80% plus of funding goes to UK-based teams, but UCL's Cecilia Rickap criticized that taxpayer money is expanding U.S. tech ecosystem power. ARIA is exempt from FOI laws. West Midlands receives just 0.8% of total funding. Third, AI is disrupting nursing as Uber-like gig apps grow. Algorithms now set earnings and work schedules for nurses. Business Insider reports gig work apps for nurses use AI to evaluate performance and determine pay. Shift assignments are also handled algorithmically. This is a new labor model, distinct from traditional hospital employment. Individual nurses register on multiple apps and take short shifts based on demand. Nursing groups warn of risks, including low pay and unstable work conditions. The AI job displacement debate is spreading from white-collar to healthcare frontline blue-collar work. With 22 to 25% of U.S. adults aged 22 to 25 facing AI-driven unemployment risk, nursing is no exception in this structural shift. Finally, Xerox pivots from hardware to AI-driven IT services, officially launched its AI-powered IT as a service platform built on ServiceNow. Q1 2026 earnings showed revenue of $1.85 billion, net loss of $105 million, diluted loss per share of $0.84. As the printer business struggles, Xerox is accelerating a strategic shift toward services targeting small to medium and mid-market clients. Analysts project the company could reach $7.7 billion in revenue and $2.5 billion in earnings by 2028, requiring 7.7% annual revenue growth and a $3.8 billion earnings swing from current losses of $1.3 billion. Fair value estimates range widely from $2.25 to $30.86 per share. Reflecting significant uncertainty about execution capability, Xerox joins HP, Canon, and Konica Minolta in the office equipment sector's AI services transformation, a test case for legacy enterprise reinvention as AI native amid the SaaSpocalypse. That's all for this AI News Flash.